The global M2 money supply has been spiking hard, and historically, when we've seen run-ups of this size, Bitcoin has gone absolutely ballistic. But why does this happen? Well, in this video, I'm going to break down how the M2 money supply directly fuels Bitcoin's price surges, why Bitcoin doesn't react to liquidity instantly, and the delay you need to watch, and how past liquidity trends can give us a glimpse into Bitcoin's next big move and broader market shifts. Let's dive in. Before diving into the charts, let's first take a moment to understand what global liquidity is and how it influences Bitcoin. The global M2 money supply represents the total amount of cash and near-cash assets circulating across the world's major economies, including China, the United States, Japan, the United Kingdom, and the EU. Right now, the total global M2 stands at a staggering $95 trillion. As more money flows into the global system, it often drives increased spending on risk assets, like Bitcoin and stocks. For investors, liquidity indicators become an invaluable tool for assessing the potential impact of money supply changes on Bitcoin's price. Keep in mind, Bitcoin's price is just one side of the equation. If you're measuring Bitcoin in US dollars, as most do, you also need to account for how the value of the dollar evolves over time. While Bitcoin's price is influenced by its own supply and demand dynamics, it's also affected by the broader money supply. Historically, Bitcoin bull markets have tended to coincide with periods of rapid global liquidity expansion. The key takeaway here is that global liquidity doesn't impact Bitcoin immediately. The challenge is determining the delay, how long it takes for newly printed money to flow from government hands into the economy, and eventually into risk assets like Bitcoin. This delay is why we typically shift the M2 data forward on charts. There's a lot of debate about the exact time lag that results in the strongest correlation with Bitcoin's price action. Research suggests that Bitcoin tends to lag behind global liquidity by anywhere from 8 to 13 weeks. Of course, this can vary depending on factors like which global liquidity indicators you're considering or which economies you include in your analysis. From my own research, I've found a correlation range between 71% and 87% depending on these variables. For today's example, we're shifting the M2 global liquidity indicator forward by 10 weeks, which gives us an approximate 83% correlation. On our custom liquidity indicator, we can overlay a 50-day simple moving average to serve as a reference for when the money supply is expanding or contracting. Whenever the liquidity indicator stays consistently above the simple moving average, we can reasonably expect Bitcoin's price to follow suit at some point in the coming months. To make this even clearer, we can add green and red colors to the chart, highlighting periods of growth and contraction. This color coding helps us visually match these liquidity trends with Bitcoin's price movements more easily. Throughout this entire bull cycle, we've seen that every major price move in Bitcoin has closely correlated with the delayed liquidity indicator. For example, at the previous bear market bottom around $16,000, a sharp rally in M2 triggered a Bitcoin price surge, doubling it to around $32,000. We saw a similar pattern when M2 began to rise in early 2024, leading Bitcoin to rally from $40,000 to about $75,000. Another surge occurred after the summer 2024 lull, with Bitcoin climbing from $55,000 all the way to its all-time high of over $100,000. While we can point to numerous macro and on-chain factors to explain the recent sell-off from the latest all-time high, the key observation is that it once again perfectly aligns with an M2 supply contraction. It's difficult to dismiss this data, especially when we observe the exact same correlation with other risk assets like the Nasdaq and S&P 500, based on decades of data, far more than what we have with Bitcoin. So, where does this leave us as we look ahead? Right now, we're seeing a significant and accelerating surge in global liquidity. Historically, when liquidity expands like this, it's been a leading indicator for major moves in Bitcoin and risk assets in the months that follow. If the trend plays out as it has in the past, we could see Bitcoin continue to trade sideways, or even experience some downside volatility, through the end of March. But beyond that, things get interesting. Heading into late April and early May, we could be setting up for a sharp move higher in price. And while the headlines are full of fear, slowing global growth, sticky inflation, and fresh concerns about Trump's proposed tariffs potentially disrupting markets, these kinds of narratives tend to miss the bigger picture. The data shows that previous surges in M2 of this magnitude have consistently pulled both Bitcoin and traditional assets like the Nasdaq higher. Liquidity is the fuel for these markets, and right now that fuel is still pouring in. Even if the correlation between liquidity and price isn't perfect, the sheer volume of capital entering the system creates conditions where significant upside is on the table. If you're paying attention, this is the kind of environment where just catching part of that wave can result in explosive moves. The next few months are setting up to be pivotal. So, to wrap things up, it's clear that global liquidity plays a pivotal role in driving Bitcoin's price. The M2 money supply, essentially the total amount of cash and near cash assets in major economies, has a direct impact on risk assets like Bitcoin. As more liquidity enters the system, it tends to fuel higher spending on assets like Bitcoin and stocks. However, one important thing to keep in mind is that this effect doesn't happen immediately. Bitcoin's price tends to respond to changes in liquidity anywhere from 8 to 13 weeks later. That's why we shift the M2 data forward on our charts to better align with Bitcoin's price action. By doing so, we can get a clearer picture of how these liquidity movements may influence Bitcoin's price in the coming months. And it's not just Bitcoin that reacts to global liquidity. We also see a consistent pattern in other major risk assets, like the Nasdaq. When liquidity surges, these assets tend to rise as well. This broader correlation is valuable because it suggests that the trends we're seeing in Bitcoin could play out in the wider markets too. So, as we look ahead, global liquidity is something to keep a close eye on, as it could lead to price surges across multiple markets in the coming months. And that's all for today's analysis. Want more in-depth insights on today's topic? If you prefer written content, join my free newsletter for exclusive analysis. Click the link in the description. Thanks for tuning in, and I'll see you in the next one.